Hey guys, it is Julie here with TipRanks, and today we're taking a look at two stocks that analysts have deemed their top picks for the rest of 2023. So let's get into it. Alright guys, welcome back. Thank you all so much for being here and happy Monday. I hope you had a great weekend. Today we're taking a look at two stocks that analysts have called their top picks for the rest of the year. Both of these companies come in under $10 per share, and analysts are predicting some pretty substantial upside. So we're going to take a look at these companies, what it is that they do, and why analysts are feeling so bullish. Don't forget to make sure you've downloaded the TipRanks mobile app so you can follow along and check out some other fantastic investment research tools. Links will be in the descriptions down below. Now let's get right into our two stocks today. First on our list today for analysts' top picks is Evolv Technologies. Their stock trades under the ticker EVLV, currently priced just shy of $5 per share at $4.87. Now, they've seen a lot of growth, including 97% year to date, 61% in the last 6 months, but have cooled off recently and are down 18% in the last 3. Evolv Technologies specializes in cutting-edge weapons detection systems tailored for security screening. They're developing new generations of weapons detection technologies to meet the challenges posed by today's multifaceted threat environments. Rather than using legacy metal detection, Evolv bases its security and detection systems on advanced sensors and AI for the most sensitive possible detection of concealed weapons. They locate their sensors at ingress points and allow entrant screening without anyone having to hand over bags or submit to hand screening. Their scanners can be found in ticketed venues, casinos, schools, and even industrial workplaces. Since the company was founded, they have done more than 750 million screenings. They shared their Q2 earnings report on August 10th, and they did come out with a narrower than expected loss. They reported a loss per share of 10 cents, which was 2 cents better than the analysts anticipated 12-cent loss per share. Revenue came in at $19.8 million, which grew 119% year over year. They also saw their Evolv Express subscriptions grow 195% year over year. One analyst who believes in the Evolv stock for the long term is Brett Knoblauch from Cantor. They said that Evolv has delivered 2 strong quarters in a row, and they believe it is still a largely unknown name despite the shares being up year to date. They believe that Evolv is a stock investors should own and not trade, as over the next 10 years, management expects to increase deployments to 100,000 from the 3,400 today. They also note that they question why every school or public venue does not deploy Evolv Weapons Detection Unit, given the safety and convenience it provides to families and school and building operators. Of course, with the stock being one of their top picks, they also give it a buy rating, and they are one of 5 analysts that currently have a rating on the Evolv stock. With 4 buys and 1 hold, the average price target for Evolv is $7.28, which would be a growth potential of nearly 50% from current prices. Taking a look down below, we can see both of our most recent ratings come in with an upside of around 75%. On the low end, we do have a hold with just a couple percent upside, and a middle price target there with 43% upside. Our second analyst top pick is Playa Hotels and Resorts. Their stock trades under the ticker PLYA, currently priced at $7.19 per share. Now, they saw some sizable growth here going into the start of 2023, up 24% over the past year, but you can't see they have been cooling off here lately, down 23% in the last 6 months and nearly 12% in the last 3. Playa Hotels operates a network of luxury hotels and resorts across Mexico and the Caribbean. The company has 26 properties with prime beachfront locations in Mexico, Jamaica, and the Dominican Republic, and a total of more than 9,700 rooms available. The company's hotel brands include Hilton and Wyndham, and Playa has options for both adult-only and family-friendly resort vacations. Now, as we saw reflected in the stock chart, they have been facing some headwinds lately, including softening demand and increased competition. And with this, despite the results being down year over year, they were in line with expectations. Earnings per share came out at 13 cents, which was in line with estimates, and they reported net income of $20.6 million. The company reiterated their future guidance and did note that they remained optimistic about the runway for recovery in Jamaica, given the strength of that market prior to the pandemic. The Playa Hotel stock stands out as a top pick for analyst Tyler Battery from Oppenheimer. He said that they reiterate Playa as a top idea in their coverage post a management meeting. They think the company is well positioned versus others exposed to leisure travel. Its all-inclusive product offers a compelling value, and its market exposure can contribute to sustainable demand growth. They said that Playa also has the best leverage profile in its history as a public company, no upcoming debt maturities, and enough cash flow for substantial buyback activity. Now, there are just 4 analysts that currently have a rating on the Playa stock, but they do all come in with unanimous buys. And the average price target comes in at $13 per share, which would be a growth potential of nearly 81% for this next year. Down below, our most recent rating does come from Oppenheimer with an upside of 66%. Our low-end price target is a buy rating from 2 months ago, still with an upside of 52%, and we have a high-end price target of over 121% upside. So there we have 2 companies that have been designated top picks by analysts and also come in with a strong buy consensus. Let me know your thoughts on these 2 stocks in the comments down below. Were they on your radar before, and do you agree or disagree with these analysts' outlook? I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just letting you know what those Wall Street analysts are looking at and providing some insight and entertainment. So please make sure you always do your own due diligence and research. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.